Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Monday, the 21st of March, 2022. So, in looking at the markets tonight, we watched Fed Chair Powell do his interview with I think it was called the National Conference of Business Economics. Interesting questions, very bright ones were asked of him. What's the Fed going to do if inflation stays as high and runs further? Fed answer, we can get more aggressive with the interest rate. In other words, instead of 50 basis point hikes, they can get even more aggressive, go to the 50-point numbers. So the Fed have made it very clear they're going to fight inflation. That's their focus right now. They don't have a labor market to worry about. It's strong. He said that as well. I decided tonight to switch gears on you and go to Alibaba Holdings instead of Lockheed. I appreciate everybody writing me. And this was a good one to look at because we know that China has beaten this up terribly. This was a market that was here over $300 a share. It just hit a low of right here last week, not this week, last week, 73.28. So what it's fallen, call it round figure 75% in value. Now China is saying enough's enough. We're going to put money into things. This is beaten down. They're not saying specifically Alibaba, but they're saying I think they've grabbed control of what they had to, and now they're getting behind the economy again, and that caused a bounce. Now, 1 week doesn't make a bottom, but what does make bottoms is hitting lower Bollinger Bands. And as you can see, each time you've hit it, you've had a neat little rally with the market. These rallies have all failed against the 18-week average of closes on a weekly chart. So you know what you should be looking for. You're looking for when you can get over that and start holding. That's when you have an idea bottom is in place. On the daily chart, you have what's called an island bottom. We haven't seen one of these in a long time. That's when you leave an area like this on the chart, and that's the gap. If you don't fill that gap, that's called an island bottom. It's often a very good sign of a real bottom having been in place. On the daily charts, you also have a pattern on the swing line of higher lows and higher highs, which is bullish. The market is fighting right now at the 18-day average of closes for support. My guess is the bulls, enamored by this island bottom, are probably buying the market on the pullback to 99.21. They were able to do that today. The low is 98.70. And I think they're looking to see, as long as you don't get under 95.77, maybe you get the pop in the market, and maybe that pop goes back to the 118.18 level, the upper Bollinger Band. I understand their thinking. What is working against those people is the fact that you're overbought. Overbought corrects by either getting a market correction or getting these two numbers to get over 80 and go sideways. Then it embeds. We're not at that point. So, interesting chart, but in overbought territory. Don't know that I'd want to be a hero looking for that low, but I have reasons enough not to be short. That's important. In Apple, the bounce, each time we've gotten to the lower Bollinger Band, you've come back for a challenge into this area. The difference on this challenge now is we're over the 18-day average and challenging the 100-day moving average of closes. Momentum is pointing up. The readings are in overbought territory. Any number over 70 is overbought. So I'm going to look for between this 18-day, the 100, and the upper Bollinger Band, a lot of resistance to stop the rally. It wouldn't surprise me if you get a pullback to 161.12. Can you get a buy signal out of the current pattern? No, because you have a low and a high, a lower and low and a higher high. But what did happen is, again, this challenge of the 200-day average proved just what I said. That's where the investor traders keep coming back into this market, and I think they did it again. Remember that Jekyll and Hyde that I give you. When you're looking at XLF, it's the same thing. A lot of resistance between the 18, the 200, the 100, and the upper Bollinger Band. You got three averages there that you're looking at. Well, two averages in the upper band. I look for support back at the 18-day average, but the difference here is you're in an uptrend. So on the pullbacks in the market, my guess is that the trade's going to be watching the 18-day average. I don't like that it's overbought, but I don't see anything here to be bearish about. In Disney, you got that run up to the 18-day average and you magically stop. You hear me tell you about that all the time. It's the line in the sand. Now, some people can use a 20 or a 21-day average. I've seen all kinds of things. Okay, I like the 18. You can use whatever you want. But it's the zone that's important. And what's happened there is each time we've hit these low zones, we're getting bounces. More times than not, they do go back to the 18-day average, but they're failing against that to establish a new uptrend from there. That's still the case here. The industrial sector, I think today was liquidate all long positions today. Why do I say it? The combination of hitting the 100-day average and the 2. Now, I could make an argument that I think the pros did it here. This was Thursday, the 17th. Yes, it's carried further, but I still think that that's what they're doing, backing away from the market. If it embeds, where you get the red and the blue line staying over 80 for several days in a row, and today, so you'll know, was the second day of it. If I go back to Thursday, you didn't have it. So if this happens tomorrow and then you start getting the embedded reading by Wednesday, then I'm getting very excited. Then on the way down, on pullbacks, I'll be telling traders to go long again, but I don't see it just yet. In the home builders, the hardest thing about this is the homes are a lot more money. Mortgage rates are up. The buyers get priced out of the market. That's the problem. It's not that the demand isn't there. It is. But demand doesn't account for how much do you make, how much can you afford to buy. With rates going higher, you don't qualify as many people. Things to be looking at. Certainly the chart action isn't terrible, but it's not bullish either because you have a lower low, higher high in an overbought area. In the energy sector, the correction to the 18-day average so far to me looks just like that. A market that had been running over the upper band got into a correction, went back to the neutral number, that number finding its legs now. The energy can go up here into the 120s in the crude oil very easily. You're in the 112 area, so be careful there. GLD is in a bear phase until you take out 182.03 and especially close then over 181.95. That would give me the buy signal I'm looking for. Prior to that, you now have a pattern of lower highs and higher lows. You've gone into a pause. You resume the downtrend if you take out 179.04 and don't take out 182.03. That could open the door up to get back to 174.45. I don't think that's going to be the case because you're oversold, but it's always there. As I said, it closed over 181.95 and taking out 182.03, I turn on the light to be bullish. In GDX, the market today gave a buy signal. Now you have higher lows and higher highs. Without this, you didn't have it. You had the lower highs and a lower low. You do see that. But with the action now, you've reversed that. This is where I think the pros went. I don't think they jumped into GLD. I think they jumped into this market. I think they'll be out of the trade if you close under 36.88, and I think they're looking for 39.82 to the upside. In copper and XME are still my favorites, all right? All because at the end of the war, at the end of the events, we still get into spring, we still get into economies around the world, fighting inflation, but still trying to make up with the supply chain event. Hopefully, via all that's going on in the world, they can finally clear the ports out, I would hope, and be able to get our supply chains moving with all those ships that are still at the port of Los Angeles and other ports. So something I watch. But the bigger story is you seem to be going from the upper band down towards the lower band and back and forth here, but carving out a higher high on each one of the overall moves. Still a bull market. A very bearish market is still TLT. I've got traders in the morning subscriber. They're aware on that rally. I was telling them short BND, AGG. It was each one of them telling them about those type of trades and why. You have an embedded reading. Follow what the embedded reading does. Now, I've added something new for you, UUP, which is the Invesco dollar bill, if you will, U.S. dollar index bullish fund, okay? And It's in a downtrend, but right against the 18-day average. You turn up in this trend if you take out Friday's high. That would give you then higher lows, higher highs. It's got to close over that, stay up there in order to prove it's any good. If the market doesn't take that out and closes under 26, it actually throws out a new bearish signal. So you're on the cusp of something here. I like the idea of the long side because you've corrected an overbought condition already. It fits in with the euro, which any move tomorrow under Friday's low, which was 102.09, throws me into lower highs, a lower low, a bear trend, and you could be headed back to this low after you've corrected to the upside. You know, you keep hearing me allude to my morning updates and then my webinars and so on. And I'm going to have another webinar. It's going to be this Thursday. If you didn't get my morning invite, means you're not on my mailing list. Take your cursor, move it up, and just click right up here. Fill out the form. You'll get an email with your user ID and password telling you the time. I'll open it at 12:15 p.m. Central Time on Thursday. We begin at 12:30. And if you have spiders, ETFs, stocks, whatever you want me to cover on those, write me. My email's there. Just click on it. Tell me what you want me to cover, and I'll do it for you. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.